Hey, it's Pete. If you're trading stocks, today is your ultimate guide to reviewing your stock picks before the market opens so that you can avoid trades without profit potential and how to raise your conviction on stock picks that should be your biggest winners. This is a behind the scenes sneak peek into a pre-market game plan meeting that I host every Monday through Saturday for members of my community. Yes, we do have meetings on Saturday. Some of the things you're going to learn in this video is a simple morning setup strategy that can cut your trading time in half while boosting your accuracy, how one key reversal signal could be the beginning of a massive market move. You don't want to miss that one. Something that we call a snapback trade. It's your secret weapon, how to spot them in seconds, and why they lead to some of the best swing trades. Discover the subtle indicator that signals whether institutional money is moving into a sector. The surprising reason why lighter volume could be your biggest ally during a trend. Why traders who reduce position size at the right moment will outperform without taking bigger risks. There's also a little known scanning trick on a very popular software that I'm going to show you that reveals the top performing sectors like that. There's also a mindset shift that turns losing trades into stepping stones for massive future profits. And finally, the key to recognizing when resistance, that's right, support or resistance, will hold or whether it's about to shatter, and those are the breakout trades you want to hop on, and maybe with a little bit bigger share size. Enjoy the video. Leave a comment below if you have any questions. Boyan, yeah, sorry about that. I actually missed your question because we got into a whole bunch of other stuff. So you know what, let me actually get into that first, just to point that out to everybody. So Boyan, on your question here. The one thing I just wanted to point out, like the snapback trade, and this is a good lesson for everybody as well. The snapback trade it came into the day and perfectly set up where you got a lower opening and it pushed back. And that little blip there, the entry, is what actually gets you in the trade. But the big part of the trade is like what we're looking for is we're looking for early short sellers, in this case for a buying opportunity, to short sell this short-term move down, but it's in the context of longer-term bullish price action. So if we take a look at this chart, you can actually get a better view of what I'm talking about here. So we got this longer term move to the upside and you get this move to the downside. So we're basically looking for this to push down and reverse, right? But on the idea that we're talking about here, it did that. It pushed down and reversed. But the context of the trade is we're looking for buyers to step up and never see this low again. But we do have the low as the emergency brake, so to speak, if it doesn't follow through, because when these trades follow through, they're amazing. If they don't, they're a good, quick, small loss. You take the trade, you move to the other side. Now, whether or not you got out over here or definitely got out over here, that's the proper management of it because it technically didn't follow through. It did the next day and after where we did kind of make a higher low from over here, but the textbook way to manage the trade, and really, honestly, I think what I wrote yesterday is more about the mindset, is that the mindset is, you know, very similar to a breakout trade. Snapback trades are really effective because they catch one side of the market on the wrong side. And when they're caught, they have to get out, and then new people come in, see the reversal, or in this case, pushing back in the direction of the bigger picture. It turns into a really fast move in your direction. So if you could kind of visualize, you know, up at this point here, we have all of this buying pressure and the lower opening, which you can see, obviously, it's got a little bit more weakness here. But when they reverse, you get two different sides buying. You get the people that shorted early have to get out of the trade, so they're buying. And then you get people buying the dip, they're buying, and you get two different buyers, and it just really moves really, really quick. And that's actually what ended up happening, right? It did ended up following through that way, but the technical setup did kind of stop us out over here. But that doesn't mean the next day, this inside candle, almost an inside candle, you got this big wick up here where you couldn't have bought here and then got back involved. But really the main thing is the context of the trade, where when they work out, one side of the market is screwed and you get these kind of fast moves like this. But on this one here, the day of the entry, we just happened to have gotten stopped out, or the technical setup did stop out. And that's really more important in the long run. You take these trades, take your loss, go to the next trade, move on, and then just look to get your capital back and put it somewhere else. But this is a really good example of the setup, how it unfolded, this little thing here, and then the way it ended up unfolding after the fact. So the other thing I want to point out, I see Ian's here and Jitender. Boy, we had some tremendous, actually, if my New York and my Italian came out yesterday, we had a great conversation yesterday around putting in the work, and more specifically about day trading. The day trading session yesterday off of Ian's question was just amazing. So Ian, thank you for putting that in there. We had a little bit of a back and forth. I think Ian's question alone yesterday was at least 30 minutes, how we broke all that down yesterday. It was such a good detailed breakdown of the day trading process and scanning and all those kinds of things. I'm actually going to take that out and put that into a day trading curation of the best stuff from day trading. We're actually on the new website. We're actually making a day trading academy, just so that the day trading aspect, because not everybody day trades, the day trading aspect of what we have going on is a very different aspect, because a lot of people are, have full-time jobs or running a business and, that kind of stuff. So this is the new dashboard for the website that'll be up next week. And obviously you can see everything here. It looks pretty darn awesome. But we actually are coming out with a day trade academy, which is going to have all of these other day trading type stuff in here. So we're going to have the day trading and the option stuff in here. Super clean, super excited about this. We'll save this for another conversation, but hopefully we'll send out a bunch of notifications. But if everything goes according to plan, which nothing in business or software ever does, just to be clear about that, we will likely end up having the website merged by this time next week if everything goes according to plan. So, all right, so let's get into it. I want to make sure we leave enough time and get into everything. Awesome. All right, Robert, thank you. Okay, so let's get into your picks. Let's go over the trade reviews. I just want to make sure we start out with this, because a lot of people need to make sure they get their trades in before work starts. So both of the ideas that we have this week, it kind of exploded in our direction, probably going to be a little bit of a pause. Both of them actually triggered the edge share level. So the first day we got into the BX trade, kind of waffled around a little bit, but then it kind of exploded into an energy candlestick. We hit the edge share price. This is the important part here. The stop loss now moved up to the initial entry. So we have a little bit of risk on the second piece, break even on the first piece. Same thing over here. EQT exploded as well. When we 5.58% on the original entry. Same thing. Edge share level hit. Stop loss moved up to the initial entry. So it's very important there. Again, just to set the mindset for everybody, the reason we don't use the average price of the two is that it tends to be too close to the second entry. And we don't want to have a good trade stopped out on, just basically like one little blip. So we give the stock a chance to move. And the thought process behind it is we now have, the bigger full position for our initial part of the trade. And we have risk on half of that because the original entry would go back to break even, but the potential gain on the entire full added trade. So to really kind of bring that together is half risk on the full entry and full share size on a profitable trade if it follows through. I will take that bet my entire life. And I know I say it that way all the time because I really want to drive home that point that don't worry about the few that get stopped out on. Focus more on managing the few that do follow through, because those will far outweigh and pay you in a monster way when they do. Okay. It's just really basic math on that kind of stuff. We are starting to see, oh, by the way, Hood is a pretty clean snapback trade coming into today, so keep an eye on that one. So very similar, we just talked about in ZM. We're looking for it to push down and snap back, and it looks like some of them are taking a hit this morning. Here's the EQT trade that we were talking about, but I want to talk more about sectors that are finding some buying pressure, which I'm really kind of geeking out now over this new stuff that we're putting in here. So again, I'll just explain it really quickly, because one of the questions that came up on the call last night is how do we focus our scanning so we're not spending hours? And that's really the whole point of this stuff here, is to try and point you in a direction to say, oh my God, look at that giant green thing. What I got to go pay attention to those stocks. So this is the monthly performance by sector, and this is a little different. What I'm actually doing here is I am taking all of the stocks that meet the minimum criteria and then averaging out the performance of those stocks. So it's kind of like our own mini ETF of those stocks. They're not weighted, but it's also not every stock. It's only the stocks that matter, which they have to do a certain amount of volume and that kind of stuff. So when you combine these two things together, the monthly and the weekly, it should kind of like really dial in your attention on where you should be looking. So you can actually see, and this is really one of the biggest things I want to get across, is you can actually see from the monthly here in basic materials to the monthly here this week in basic materials. This is where you start to notice and kind of get alerts to or alerted to reversals from bearish to bullish from where the month was to the week is. And now I'd be starting to pay attention to some basic material stocks, and we're starting to see that play out. So I want to keep giving everybody insights on how to use the research, because it should really kind of condense the amount of time to find the stocks that we would be looking for. And look at real estate for the month compared to how that reversed as well. But more importantly, look at utilities. This is really my main point. Utilities started out finding a little bit of buying pressure, and look where it is now, right? So we're getting follow through on that reversal. So that's really the big thing. I just want to kind of continue to train everybody on all the extra stuff we're doing, and having it is one thing, using it is a whole other thing. So I just want to keep I want to make it easier and easier to find the great ideas so that you can ultimately get to the point where now you're just going to focus on trade management and making money, as opposed to you're feeling like you're spending a lot of time on just finding the ideas in the first place. Once you're dialed in, finding the ideas is actually the easy part. It's the trade management part. That's the skill. And that's really what we want to start to focus on. Okay. Okay. All right. So we spent some time on the coaching. Let's get into your ideas. So just going to refresh this. We'll get into your ideas, and then we'll pop into some of the news stories that came out today. Andre, WFC. Yeah, a lot of these stocks in this industry group and sector are just kind of hovering right there. So you can obviously see the levels that we're at right now. We've cleared any major hurdle. We got a melted week and a couple of melted candles here, but we finally did pop through this level. Got a 3-day pause here. Let me put that volume back in there. Got a 3-day pause here. This breakout happened on good volume, so we are getting some follow through this morning. I like it. Again, what's not to like about it? Actually, let me drop the moving averages back in there so we can see that. Harmony looks fantastic. Lighter volume pause during these 3 days. Would have preferred to have seen this close during the day a little bit higher. We didn't get that. It kind of pulled back at the end of the day, but still pretty good. Oh, actually, let me put that back in there. People ask about this all the time. That's what's known as a market on close order. Just kind of like getting ahead of the question. People always ask, can we learn anything from that big giant volume at the end of the day? And it's what's known as a MOC order. And essentially, it's basically people saying, I'm not going to do this order all day. I'm just going to get out on the close. And that order is kind of sitting in there. I really have not found any kind of tradable thing off of that. But it is interesting to watch and ask a question about. So this trade's setting up well. You got good industry group support. You got sector support. Everything looks good. Just a question to follow through today. And this stock has really kind of turned around itself. Look at what it's doing almost a year now. Pretty solid price action. So anyway, the trade looks great. Earnings are out of the way. I like the way this is setting up here. This might be a little bit high from a risk reward perspective, but based on the average true move, it's in the ballpark. It's in the ballpark of this year, and that's kind of what I mean right there. So it's basically 2-to-1, not 3-to-1, based on the average true move. So we're looking for the average true move to be exceeded on the next move. Otherwise, it's a 2-to-1 trade. But more importantly, is Andre's recognizing that and mapping it out. Okay, super important. All right, great job. Again, posting every day. That's where that muscle memory comes in. All right, Jitender, first, thank you for your detailed reply on yesterday's coaching. Okay, we'll cover this at a different time. Everybody watch the video when I got up to Jitender's question yesterday, because I almost jumped out of my chair. It was basically asking, how can we get more efficient with game planning and scanning and all of those kinds of things. But the way it was worded, it sounded like he was looking for a shortcut, and that kind of made the hair on my neck shoot up, because The one thing that is kind of like my reputation is how hard I work. I'm getting more efficient, but hard work is a requirement when you're, especially when you're starting to learn something. But I do want to say this in context, because when you watch the video, you can be like, oh my gosh, Pete's crazy. I'm not crazy. I care a lot. That's the big difference. Like, I care deeply about certain topics, and I get very passionate about topics because I know they could make a difference. So when you watch that, think well of me. I'm not crazy. I just really, really care. But more importantly, the way that Jitender receives my feedback is inspiring to me, because he's listening to what I'm saying and not so much feeling like I'm contradicting what he's saying. And that's the ultimate form of learning. And I can't say it any other way, that I really am grateful that our members understand that if I don't give you the answer you're expecting, I'm giving you the answer that I think is needed based on your level of the question. And I admire everybody in the community for that, because I just want you to win. That's the only thing that matters to me, is I want you to win. And the best way for me to help position you to win is by making it clear your question is something that I went through myself, and it's an important topic for us to get through and discuss. So thank you, Jitender, for seeing the way I worded that yesterday in the way that I hoped it was received. Okay. All right. Looking at SNV. So the banks are popping, and actually JP Morgan still kind of hanging out up at that level. A lot of the regional banks are doing well, Zion and a few of the other guys as well. So we do have some industry group and sector specific strength. So we have a nice pullback here. Look at the volume pulling back, still well above the 20-period moving average. This is the earnings play right here. So this would have stayed in play, broke some pretty big levels. And if we kind of map this out, again, this is somebody who asked me the other day, why did we look so far out? Well, we need to know where sellers or buyers did something significant last time. That's kind of how we qualify support or resistance, right? Where did buyers or sellers do something significant? Well, we got through this most recent level, and now we're kind of pausing and sitting right back at the other level. This is a big level, and we're kind of right back at that level. We got a nice pullback on light volume. Again, we talked about this a lot this week, the decreasing volume on the moving average of the volume. This looks solid. Look, this pullback is last week's red candle. We're now looking at a bullish U-turn on the weekly, which is these two candles right here. This is a solid play. It's just a question of follow through at this point. You got the market popped yesterday. You got the industry group. You got the sector, and a light volume pause looking for follow through. This looks pretty good. And one thing that should be really clean, look at the volume on the moves to the upside, and look at the decreasing volume on the pauses. Like, this whole pause happened on lighter volume, which is where we'd be implying that we're going to get follow through on the bullish side. So this one looks pretty good. All right, let's hop on over to the trade. A bunch of other regional banks in bullish order flow. Excellent work here. So again, for those of you that are new, you want to put those other stocks in the industry group into a separate watch list for the stocks that you're watching or trading, because you will get a bird's eye view of institutional attention shown through their dollars by whether or not those stocks are all green at the same time. And when you get that sector and industry group confirmation, it gives you conviction to hang on to an idea during an inevitable pause. So good job with that, Jitender. Monthly, weekly candlesticks, bullish order flow. Last week was red, which is obviously this week's pullback. So it looks pretty good. Harmony on the moving averages also. That looks fantastic right there. Both of them are rising and above the 20. So that looks great too. Argument for the trade. Long and short-term bullish order flow in the industry group, and 2-week pause with low volume. That's perfect. That's exactly what we want to see. No major news. Earnings are out of the way, so we're good there as well. And we got a little bit of a swing low, right? Swing low on the daily charts is a low with higher lows on each side. So that's a well-bid candle, which is also good confirmation of follow-through. All right, so current price 56 and change. Entry and stop loss looks good, especially for the average true move. That's fantastic. Game plan looks weak in terms of risk reward initial profit target, but the average true move during the last 3 moves is good. That is fantastic, because what we're actually saying here is based on the risk and the potential reward of the risk might not be perfect, but going that extra mile and saying, but what does it normally do? Oh, it moves a little bit more than what we're looking for based on the risk reward. Therefore, this trade idea looks solid. Excellent game plan from start to finish here, Jatender. Very, very good. All right. Hard to find a good entry and risk reward, so not chasing it. Looking at SQ. SQ has been that whole sector, more specifically the industry group that SQ is in, all popping. If you go into the research document, let me just kind of, again, I like to keep showing everybody how to take advantage of everything. We go into the stocks with bullish stacked order flow, and we take a look at the industry groups. So we want to go over here and sort this by A to Z, and we kind of work our way down. Look at this bad boy. Look at all of the stocks in software application, and then we have all of these stocks in software infrastructure, which is all of these. So that's a very good visual of industry group institutional attention. What does that mean? That's really big words. It means that institutions are spending money there because it's happening across the board. So this is actually very healthy from a rotation and a market breadth perspective, which means that we are now moving away from just the chip stocks having the artificial intelligence attention, which was amazing. A lot of them are weak right now, believe it or not, other than NVIDIA. And now we're starting to move over into, okay, who's actually using the AI and where is that money flowing? And look at what we have here from software application to software infrastructure, now moving to the next stage of the power of what artificial intelligence can be. And also for us as a community, that is just a tremendous visual for you to have in your mind to really be thinking through, okay, AI is a big deal right now. Who's now using the AI? And we've been saying that for months, if not a year. This is great, but can somebody show me how you're going to actually use it besides building the damn thing? And now we're starting to see it in a much bigger way. So kind of exciting to see that playing itself out. All right. So Henry's in a good industry group here. That's basically what we're getting across here. And now the stock is actually in a 3-day pause. The only downside here to this one, this candle's obviously fantastic, right? Look at the decreasing volume here on this pause. Unbelievably great. That looks great, right? So if we're sitting there, we're like, oh my gosh, this is fantastic. I want to see more of that bad boy, right? Again, print this out, take that chart. We talk about that all the time. What do I want to see? What don't I want to see? Show me what perfect looks like, right? That's amazing. Then going forward, be like, okay, I want to see another one of these. Did we get it? Well, we got good volume on another well-bid candle. Yes, in that sense, great. Great. Now what? Well, I want to make sure we're going up again. Well, what we don't want to see, that is good, right? Light volume pause, that's good. And now we got a heavy volume. So 3 days out of 4 on good volume. Now it's a question of whether or not this is a 3-day pause on heavy volume. I actually think we're okay. If you look a little bit further out here, we kind of readjust this resistance level here. We're also behind that. So Henry's trade here is actually at a pause where the bullish days are increased volume. Check mark, that looks good. The bearish day, lighter volume, check mark, that looks good. Blasting through this resistance level looked pretty good. And how about profit potential? Well, the next level is all the way up here, going all the way back to 2022 at 140. So we have a lot of room to go. So we got the sector, the industry group. We broke big resistance. We have reading the notes within the song, which is reading the price action. Recent price action and volume also looks good. Now, like I said, is this a pause? Yes. Should we be concerned about a heavy volume pause? Not really, because the heavier volume on the upside and the lighter volume during the down day is actually what we want to see. So this is actually lining up pretty good. So Henry, even though we might be having a hard time finding good risk reward, this is actually setting up a good trade. It makes a lot of sense, and there's plenty of room to go. So now we're getting into what we need to risk in order to justify the trade. Even if this trade does not follow through, it's a solid idea from a risk reward perspective, a price action volume perspective, plenty of reward potential. This is a solid idea. And I love that we're putting in the average true move here in the context of what the stock could possibly do coming out of this break. Do you see price discovery in the beginning of 22 as resistance? Yes, absolutely. Kind of going back all the way over here. That's the next level because we're clearing this level right now, right? We're either right at that or, depending on exactly where you're drawing it, right over here is probably the most recent one, like you can see here, but we're kind of like within this $5 window, but we're kind of through that already. And up in this year at 2022 is a mile to go. So let's also kind of future pace the profits on this one. If this one follows through, we know the next major level where sellers did something significant is all the way back here, 140, 145. Manage this trade appropriately. As long as we continue to get the price action and volume that we want, use that profit maximizer, lean into this trade because you got the sector, the stock, and plenty of room to go, and the industry group. So you got 3 out of 4 parts of the power pyramid. We're just waiting for the market to break out. All right, we're making lower highs in the big picture. But great job again, Henry, posting that in there and speaking about it. Raul, good morning. Looking at CCJ. All right, so this group we talked about a little bit this morning, kind of perking up, right? Look at where we are. So this particular idea right now, we actually wrote about this where a lot of stocks in this industry group and sector are a little bit beyond the optimal entry. So again, if we could say like, where did this start? You can make a justification that it just broke out here and popped into all-time highs and looks good, right? In that sense, it looks great. But the move started down here. So we are now actually into, even if we just go from here, 1, 2, 3, 4, 5 days in a row of higher highs. So we're not exactly on a pause here. We kind of had to break out of this ugly trading range over here. Everything looks good, but we're a little beyond the optimal entry. So if we like the trade still, because we're beyond the optimal entry, for me, this would be a lower allocation on the initial entry. Now everybody's like, what does that mean? Well, if I wanted to get 1,000 shares, because we're beyond an optimal entry here and chasing the entry a little bit, if I normally wanted 1,000 to use round numbers on my initial entry, but I'm chasing the entry a little bit, I'd probably only have like 200 shares here because I just want to have a probe position to have it in my position summary to watch it for the next pause to get a little bit more aggressive. And best case scenario, we pause right near this breakout. We kind of dance around here for, let's say, 2 or 3 days. If we do that on light volume, then this next trade should be a pretty, I don't want to say aggressive, but definitely one with conviction. So we wrote about the energy sector in the daily ticker this morning. And when we kind of broke that down, we actually worked our way through. First of all, we can actually see it's starting to grow, right? Look at both sides, monthly and weekly. So we do have that kind of backdrop on it. We also have the news, right? This unfortunate situation is taking a different turn since the election. But then we also have the rotation in the sectors. So good job looking at the right sector. But what I wrote about this morning is that for me, this is really more preparing for a future trade. Number one, we already have this really good trade on an EQT, but now we're going to be looking at a tracking journal trade to find the next perfect idea, which is what we had here. Okay, I just want to give the full context so everybody has the thought process down. All right, energy candle, high volume after a red low volume candle and momentum. Everything looks good. There's not a question of whether or not this is bullish, has bullish stacked order flow. That's not a question. What we're talking about here is what is the right initial position size after the stock started moving about 5 days ago. That's really what we're talking about. So I want to just make sure it's clear. We're talking about a separation from, is this a good idea? Yes. Is it a good trade right now? Not necessarily the best optimal entry. So we're going to lower our initial risk to wait for the next best optimal entry. Okay. And I hope that visual of the chart explains that. One thing I do want to comment on here, Raul, you ask very good questions on coaching and in Discord, and you translate those questions into the next trade idea that you want to talk about. That is the perfect use of all of the resources in our community. So I just want to highlight that for you personally. Keep doing that. That's exactly how to take advantage of everything that we do. All right, let's see. Freddie, looking at EIX. All right, EIX. So very, very similar here. We actually mapped this out last week. When we broke over here, we said we're a little beyond and still just the first sign of breaking through, right? So the initial sign of a reversal is what? Initial position size if we take it on that breakout. Now, if we look out a little bit further on the monthly here and zoom out a little bit here, we have plenty of room to go, right? So we're really just looking at this 88. So we have, again, give or take $1 maybe. You can definitely see here what price discovery that was mentioned there by Henry got up to this 88 level and failed. Got up to 88 again and failed. A lower high, couldn't even get up there. And now you can see 3 successive low. We got high, lower high, lower high. This one did not make a lower high and punch down. This higher low here mattered. This one candle is what basically caught the shorts off guard. So that's a little bit of short covering there, right? If you're just looking right there, you're like, oh man, this thing's going to collapse. You got lower high, lower high, lower high. What do I want to see? What don't I want to see? I want to see, I'm expecting another push down. And that one candle right there just basically told the short sellers, nope, you're screwed. And look at the volume. So now we get this reversal where we break this short-term downtrend. But the problem is this. So we have 2 things going on here. We're late to the optimal entry. And there really wasn't one, quite honestly, because it was bearish. This is really more of a new idea. So we have this momentum far from an optimal entry. We have this resistance, which the last 2 times here, sellers just shoved this thing right back down. So we're too far into the current momentum and coming up to resistance, but near all-time highs. So this would be what we would line up as a 2-step trade if we were looking to chase this entry, which would be lower initial position size here because we're late, and lower initial size because we're about to buy into this big level where sellers said no. Sellers said no. Why would we want to have bigger position size in front of the place where sellers said, boom, we're going to whack you right back down? Not yet. Smaller initial position size for 2 reasons, chasing this entry and this resistance, if you put the trade on at all. If you do, much lower initial position size, looking for it to pause at this 88 level, pause on lighter volume, and then eventually push through there for a very aggressive hold into all-time highs. So that's how I'm mapping that one out. Myself here, Freddie, obviously utilities we talked about today, top of the list on the sector rotation, which looks pretty darn good here as well, right there for the last 5 days. Excellent work using everything that we have to map that trade out. Well bid last 5 days. Excellent work noticing that. Also representing the box, also representing the resistance. Now, I want to just touch on one thing before we move on here. I've used the language very intentionally 4 or 5 times already on this call because we get a lot of questions about how do we identify support or resistance? And just keep it simple. Where is the last place buyers or sellers did something significant? That's it. And how long did they do it? If it was a month, that's significant. That's major resistance or major support. If it's one time, didn't stay there that long, you would expect that to blast through because they didn't hold it. Where was the last time buyers or sellers did something significant? And we saw that here. Shoved it down, shoved it down. So this level matters, okay? All right, breakout above the double top. So what essentially is going on here is Freddie is actually creating what we call a tracking journal trade, where he's not taking the trade now, he's waiting for it to break through, which is perfect. And that's actually what we wrote about in the daily ticker this morning, because I want to help everybody future pace these things. We're setting up trades for next week, preparing for future trades. Something that's come up on coaching calls recently is I'm missing entries. I'm missing the trade. This is how you don't miss them, is you have a separate little list for yourself. Say, okay, if this happens, and you can obviously go in here and set an alert. Set an alert. And by the way, I would set an alert for just beyond this level because it keeps getting rejected. I don't want to know if it gets to 88. I want to know if it gets through 88. So I would have my alert at like 88.25. And then when that triggers, then I'll pull it up and I'll look for the entry that I like. All right. So great job. Also, Freddie, posting every day. I love this. I love this because you're future pacing the trade, because you're recognizing what's going on here. That is really good game planning. And I just want to say this from an experienced perspective. When you learn to avoid the trades that are not at optimal entries and either wait for an optimal entry or reduce your position size, you elevate yourself to a level that most traders never get to, because now you're not digging a hole and chasing it because of fear of missing out. You're putting yourself in position to get trades at the right moment. That matters so much because you're not going through the mental angst of, oh my gosh, another trade that I love that pulled back against me. Now you're recognizing it. There's resistance. You're chasing it, and the better trade is through this level. That's an excellent work there, Freddie. Excellent, excellent work. All right, some stocks that are in the news this morning that are rallying. ESTC, again, more earnings, easily beat estimates and raised guidance. Elastic stock, ESTC, big move pre-market this morning. Gap, again, we try to teach everybody what to pay attention to without getting into the fundamentals. Raising their guidance. Guidance means going forward. We're expecting good. We're actually starting to see this now. Think these things through. Ross Store, good numbers. So certain box stores right now are seeing good numbers heading into the holidays. Guidance is good. Strong start to the earnings season. So Gap Store, GPS is the symbol. Big bounce this morning on good guidance. Same thing here with Ross Store. Now, this is a little bit weirder. Ross Store was actually up this morning, but you had to dig into the numbers, and the margins improved just a little bit. And you can see it's actually up 7% this morning, which is another big move. So again, start putting these pieces together. Are there industry groups of stocks finding institutional attention? Yes. Well, let's start to pay attention to that so we could join them. NTAP also popping this morning. Good news and a good pop this morning also. NTAP, earnings were good, surpassed expectations. So we just talked about guidance. All stocks coming out of earnings, there's revenue that's expected, there is earnings per share that's expected, and then there's the actual numbers, and the market reacts to what was expected and the percentage above. This is why NVIDIA the other day actually went down after announcing what was expected and the numbers, because the earnings were slightly less than what was expected, went down, and then came back and reaffirmed demand. What they're saying here is they surpassed expectations, and that's why the stock is up big this morning as well. All right, so the symbol there is NTAP, NTAP, and Datadog. I want to point out Datadog because we mentioned a couple of days ago the big resistance level, that if it popped through that level, and it did. It's a little bit beyond that right now, so we're going to be we're going to be game planning. Just remember last week we said anything right around this level. Well, now we got two massive gaps followed by this massive energy candlestick breaking out of this basically trading range, which started in October. Mark this one down in the symbol in the same way that we just talked about the other stock. This pause is really going to be the next aggressive trade. We don't want to chase this, but we do want to be on top of this. Oh, you're right, actually, William. That's right. It's Gap, not GPS anymore. You're right. Thank you for that. So let's actually put that in there. There's the symbol right there, GAP, not GPS. That's an old symbol. You know what gets me on that all the time is Hewlett Packard. I think they have like 3 different symbols now, HPQ and HP and all those. So thank you for that, William. Anyway, I'm fired up. Thank God it's Friday. Next week is a holiday. Next week, the market's a half a day. A lot of stuff to trade again this morning. We're getting some really nice bullish price action coming off. Oh, the one thing we do need to talk about, especially for all those people that are trading crypto right now. Crypto did kiss, Bitcoin kissed that $100,000 level this morning. I haven't looked at it since I made the game plan. It's actually above that level. So everybody that's trading Mara and Coin and MSTR and all those stocks, they're getting a pop again this morning. Should absolutely be both on your momentum active trading list for swing trades. And if you're day trading, 100% get in there. Use our minimum viable criteria. You want to be on top of that as well. All right. Let's head over to Discord. Let's make it an awesome finish to the week, everybody. I will speak to you in a couple of minutes. Thank you so much.